Listen, the government says they want more Canadians to own homes, but they built a fucking system that blocks qualified buyers from buying one. You've got people making 150,000 to 200,000 household income, no debt, solid savings, and they still can't qualify for the home they want. They are forced to settle for the second best option, not because they can't afford the home, but because of one rule: the mortgage stress test. When the rules came into effect, the rates were historical low, then it spiked, and now the rates are down. But still, the 5-year fixed rates are around 4%. But the rules haven't changed. Now, let me be clear. This isn't some reckless led everyone borrow whatever they want rant. The stress test had a purpose. It was designed to protect buyers, protect banks, prevent a 2008 style collapse. And guess what? It worked. Even the Bank of Canada has said it improved borrower resilience and reduced defaults. Fine, no arguments there. But here's the issue. It's solving yesterday's problem and creating today's problem. Right now, buyers are being qualified at their contract rate plus 2% or a benchmark rate, whichever is higher. So even if today's mortgage rate is, let's say, 5%, they are being tested at 7% or more. Let that sink in. You've got buyers who already survived rate hikes, inflation, cost of living pressure, and now they are being tested on a financial rate environment. And the result, buyers are not disappearing, they are being locked out. There are reports, yes, actual industry reports saying over-tightened mortgage rules are locking well-qualified buyers out of home ownership. That's not me talking, that's policy research. At the same time, home ownership rates are dropping and more Canadians are stuck renting. So let me ask you, is this really helping affordability or just delaying it? Now, here is where it gets even more frustrating. On one hand, the government is rolling out programs like the Home Buyers Plan, the RRSP withdrawals, 13% HST rebates for everyone up to 130,000, development charges hold for 3 years to make homes more affordable, all aimed at helping buyers get into the market. But on the other hand, they are keeping the biggest barrier in place, the stress test. So what are we doing here? You're giving buyers tools to buy while making sure they can't qualify to use them all. And here's what smart buyers and smart investors already understand. This is not removing demand, it's delaying demand. All these buyers, they're still here, they're still saving, they're still waiting. So what happens next when rates drop further or rules loosen? Demand floods back. And what happens when demand floods back into limited supply? Prices go up, back up again. We've seen the movie before. Now look, I'm not saying remove the stress test completely, because without it, yes, there is a risk. We don't want reckless lending. We don't want over-leveraged buyers either. We don't want systematic instability. But what we need is this: reform, not removal. Make it more dynamic. Adjust it based on actual rate environments. Reduce the buffer when rates are already high. Create flexibility for high-income, low-debt borrowers. Maybe even first-time buyers adjustments, because right now it's a blunt instrument and it's hitting the wrong people. It's making buyers settle for the second best, third best options. Why? Look, we don't have an income only problem in this country. We have a policy problem. You can't claim to fix affordability while quietly keeping the gate locked. And until that changes, you're going to keep seeing this: qualified buyers sitting on the sidelines watching prices move without them. So if you're thinking about buying, say in the Greater Toronto area, whether it's in 60 days or 6 months, please follow this channel, because I break down what's really happening, not just headlines, what they are telling you. Text me 647-818-7373 or click the link below for a quick 15 minutes discovery call. I'm the Angry Realtor and I stand for buyers, sellers, investors, even renters. I'll see you next Sunday.